All right. Good afternoon, everyone. Hope you guys had a great day. Wanted to just do a market wrap up for today as we head into Friday. So, as you know, the Fed Waller spoke this morning, and I mean, just kind of mixed comments, right? I mean, they're saying that they're supporting doing another 75 basis points hike in July, 50 BPS in September, and I think that's what's getting the market riled up. Is I do believe that at least currently that the market thinks that number one, inflation has peaked at 8.6%, which we will know on July 13th next week what it'll be officially what the number is. If it's 9.0, then I think the market does crash once again to the downside. But if it's anything about 8.6 or under, then I think at that point the market will pivot, and in addition to that, the Fed will start pivoting as well as far as their rate hike, and they may step back into that 50 basis points or lower later on in the year. So the market's just kind of pricing in a recession at this point, pricing in maybe that the inflation has peaked, and pricing in the fact that, not the fact that, the speculation that the Fed will pivot at some point in later on this year. So you're getting a lot of this run. You're very, very bullish candles everywhere throughout the market. Obviously, Nasdaq is up over 2.5%. S&P is up over almost 2% on the day as well. So let's just go and take a look at the charts for now, especially the Q and the SPY, Tesla, Apples, the tickers and VIX that I generally focus on and see where we're headed to in the next couple of days. Now, this run up here is very reminiscent and very obviously it's very familiar territory we've been in, right? Right here, if you remember on June 10th, when 8.6 CPI came out, we came crashing down. That day, it was a really bad data. So it actually gapped down and created all these gaps, right? And we finally found a bottom at 269Q. So now we're in the CPI run once again here. So it's very reminiscent of this run here. When everybody expected that CPI would be low, but it came in 8.6, obviously, and the Fed's going to pivot, and the Fed's it's not going to be that aggressive. They're going to be dovish. And so we're doing it again here from 275, tremendous run here. And you know me, my technical indicators aren't very complicated. I'm always looking at volume, and I want to see volume on this run up, and we're still not there yet. If you remember back then when I was talking about, hey, look at this volume going down on this run. Okay, so we came crashing down, made a new low. And same thing with this run up here. This run up was actually a little bit better in terms of the volume. All right, but we got some bad news, etc. And that's what caused this one to tank here. Now, as far as this candlestick, very, very full body candlestick, nothing to be bearish about. Obviously, the attempt here is that the market wants to fill up this 299 gap. So that's going to be an area to watch tomorrow, 299 gap. Once that fills, I think the market will then decide where to go. If it fills that gap and continues to run tomorrow, then you're going to see this break of EMA 50, which is right at $300.13. Now, remember, back in right before the CPI in late May and June, we had this run up right here into the EMA 50 cloud, and it failed there, failed here. Okay, so right now we're coming into that cloud again. So this is an area that's going to be either very good news for the bears if it starts to reject, or the bull starts giving up steam right around this area. So my estimate is that I think at some point tomorrow, maybe even the morning run up, that will fill this gap at 299. I do think we're going to get trapped maybe under 300 tomorrow, and we're going to chop sideways. I do believe so. Just like this area here that it went sideways for literally 8 days. I think we're just going to do one of these things, around here until the Fed tells us more, or the CPI tells us more, which is next Wednesday morning at 8:30 a.m. Eastern time. So if you are a bear, I think that is a good opportunity to start to buy puts above this level. All right, and just kind of wait it out, see what the next few days looks like. It's only going to be 4 trading days away, or 3 trading days away from the time that we're going to get the CPI data. In my estimation, I do think we're going to see 9%. If we see 9%, I think this gaps down pretty hard back to potentially making a newer low on the Qs. Another thing to watch, obviously, going into tomorrow is that We are completely, not completely, not yet anyway, but we are topping out on the CCI on a daily. The bull signal certainly was there. So this is a really, really good run. But again, I'm just very concerned that the volume isn't there, but the CCI is curled pretty tight up here, which generally means that, hey, you're going to run out of steam pretty soon here. Of course, who knows what the market will do. All right, so let's go and take a look at VIX. I'm currently holding some VIX calls going into August. During this run up today, we have seen VIX bottom out right about 2560s right here, and it has stayed above that level ever since the this morning, and it has not given up this $26 level. I do hold VIX calls going into tomorrow. You can see that there is a little potential it could come down to the EMA 100 on the daily, but if it does, maybe I can average down a little bit here. But you're looking at these at the VIX, and we're completely oversold on the VIX. So whenever you have this dynamic of the markets being overbought and the VIX being oversold, things are about to happen, right? So it's just no way to tell what's going to happen, but generally that's the signals that we've been given over the last few run-ups. Even this run up here, this run up here, this run up here are all very similar headed into the FOMC and the CPI, of course. If I take a look at, just kind of give you guys a visual here, the head and shoulders on the 2-hour chart here was invalidated this morning officially here on this breakout of 288. All right, and now we're reaching into this potential 294, 295 area. So I'm still holding the puts here, but this is that area. Remember that EMA 50 is right about 300. The top of this channel is literally 299, 300. So if it can hit this thing and go through, then yeah, I'm going to be tempted to buy some calls and long calls and swing some calls. But in this area, I'm going to be buying more puts. All right, but I will definitely be able, if the market's still bullish tomorrow, I do think that, hey, there's an opportunity that we could do a 300 call and fill this little gap here on this channel. But again, over on the hourly charts, we are severely overbought all over the place along the CCI. If I go ahead and look at even the 4-hour chart on the Qs, including the pre-markets and extended hours, you can see how overbought we are here. And you can see that the last time that we hit this kind of cycle here, June 27th, and that's when things started to move downwards. And when it's moved downwards, it does create such I mean, it just rips a lot of bulls' faces once we start moving down. So what the interesting thing is, if you're looking at this 4-hour chart on the Qs, we have not touched the moving average 200 at 297 so far ever since April 19th. So you can see the market's clearly going for it, trying to get into this moving average 200 on the 4-hour chart. So it's really interesting. Everything's just kind of aligning up with the 299, 300 mark before a pullback. All right. And then we're going to go sideways into potentially the next few days into the CPI data. Now, what is very bullish is obviously Apple. All right. Apple broke the EMA 50 on the daily chart, and it looks like, yeah, it's definitely closed above and has not done this in a clear, concise way since May 4th, or even, let's say, back here on March 22nd earlier this year. You can see once it broke the EMA 50 here, it did go on a run to 178. So definitely keep an eye on Apple. If Apple holds up, you can see the indices continue to ramp up, even though it's a low volume. But here we go again on this run up here. We're still seeing lower volume once again. All right, let's go ahead and take a look at Tesla for now. All right, Tesla engulfing candlestick, nothing bearish about that. But once again, we're starting to lose steam. If the patterns hold up, we can start losing steam into this EMA 50 area, which would top out nearly at $752. If you look at the CCI once again is topping out here. Remember when I said that Tesla was overbought? Literally the next 4 days, it dropped 100 points from this area. So yeah, I could definitely see Tesla trying to make another run. The 4-hour moving average 200 will be 744. So let's go ahead and go back into the trading view. I'll take a look at the SPY chart. Now SPY has been kind of underperforming versus the Q. So you're definitely seeing more inflow into the tech market, into the tech sector. But this looks like, it has that propensity to run towards that 397 mark. So we'll see what happens with that. If we take a look at Apple 2-hour chart, very, very overbought here. We're seeing the overbought here, back over here. Now, obviously, when things get overbought quickly, it doesn't always mean that it's just going to obviously sink, right? There's got to be some type of catalyst, some type of event that could be the CPI, it could be not. So for me, my final whether I'm going to stay bearish or bullish going into after next Wednesday will all depend on CPI. If I see that we have topped out on inflation, then the markets will run, then we'll switch to bulls. But for now, I'm going to be carefully adding some puts at certain resistances and seeing where the market wants to take it. Now, you can see the top of this channel would be 147.80 or 148 range before potential pullback or cool off on the stochastics and everything else. So hope you guys had a great day, and a lot of things are it's gonna not make a whole lot of sense. Why is this thing running up on low volume, etc.? A lot of inflows coming in. So we'll see what happens over the next few days. Again, 3 more trading days until the big news with the CPI. But definitely, I mean, overall, yeah, you have very bullish engulfing bullish candlesticks, so you can't ignore that. Scalp the calls where you can. Follow the EMA format that's pinned in our room, right? But still hedge and have some puts on the side, or start scaling into it. Once again, my target tomorrow for the Q at least is 299. Fill this gap. Where's the gap? I'm sorry. That's Tesla. Sorry. My target for Q would be to fill this gap tomorrow at some point 299, and then I would probably assume, and once again, we're going to consolidate between 295 and 299 in this area until we get CPI. If we start consolidating and chop around the market, no thanks. I'll kind of stay out of that, but still load some puts and scalp some minute calls on the 5-minute charts, and then we'll go from there. So with